Good morning. Let's wait for a few more people to roll in. Starting the stream a little bit earlier today. It's a big old 1 hour till the daily close. Great Air Music, what's up, man? It's the way. It's the way. I'll wait for some more people to rock up before I start. Before I start analyzing stuff. I'm going to have a look at some of these charts, these altcoins. Hey, Static. Thanks, dude. Let's go. Appreciate it. Right. G'day, Echo, Ninja, more money, Chili Stick. Yes, Brisbane. Faye23, doing well. Busy Bee. Pozo, what's happening? Solana price prediction. Ooh. Could do that quickly. Solana's been in a... Let me just check. It's coming back down to the... well, it's, you know, basically in the middle of the range that it's been stuck in. And prediction here, if Bitcoin doesn't show any signs of strength, like bullish strength, you're going to see this roll down to previous supports, which is, you know, $32 is what I've got on the board here. Maybe even 30. It just depends on Bitcoin. But right now it's basically sitting on this area of previous resistance. It's trying to hold it as support just here. So when we get the new daily, you know, potentially there's going to be some change in direction, but I think the best place to start is by looking at Bitcoin. So as we all know, we popped out of the top of the range, came up above 24K, which is a milestone coming out of this triple bottom, or what appears to be a triple bottom. Now, with the current price action, we seem to be in a falling wedge, which I have drawn out here. You can see the bottom of the wedge has been treated very reactively. So it's just proving that these points here, you know, linked up, establish a very, you know, black and white support structure of this falling wedge. And the confirmation is by these two touches of the wicks here. So we pretty much just have to hold the bottom of this wedge. And as we all know, a falling wedge is a bullish pattern. So, you know, once we rattle around in here, you know, for a little bit longer, we come up and test the top side of the falling wedge. We're looking for that breakout. And it may not happen all at once. Like, we may not get a clean, like, you know, breakout without coming back. We could break out and then back test the top side of the wedge before moving up. So That's what I'm looking at the moment for Bitcoin. The 22K level, see, a lot of people would have this range set up where the top side is more like 22K, mainly because of these highs here. 1, 2, 3, and then possibly 4. Maybe that could be 4 and 5 because there's another little one there. But yeah, some people have this range drawn out a bit different. We got that breakout, we broke the top of the range, and we've come back to try and back test and hold as support. We have obviously dipped back into the range, but with any luck, this falling wedge or bull flag, whatever you want to call it, hopefully that's enough to push it back out and attack the next points of resistance being 24K. That's the number to beat right there, that high. So just going to bring that back to where I had it. And you can see this high here was the reason I had this range drawn to 23K, not down at 22. And you can see there was a clear reaction off the top of the range there. Got shoved straight back down, which is basically the level we're at right now. We're just sort of double bottoming with this. And hopefully it's enough to give us support, and we can look to retest the top of the wedge. So not that long ago, if I go down to a smaller time frame, we did get a bullish approach to the top of the wedge, but there was a rejection here at 22K basically. And the bears took control back and pushed it back down to the bottom of the wedge, as you can see. But the wedge is still very much in play. It hasn't been cancelled just yet. So we'll see if we'll see what the new daily candle brings. We've got what's that? 49 minutes to go. So this stream might be a bit longer than usual while we look at different things. So I'm going to turn off the RSI because I want to start bringing in the moving averages. So I'll close that, bring in. I really have to upgrade the plan for TradingView so I can get more things happening at once. Okay, RSI. Oh wait, no, that's what I just removed. Sorry, I need a moving average. Just an SMA, a simple moving average. And we'll have to go in and edit that, so you can double click on it. You can probably see it. You can see I've removed the labels of the indicators, mainly because when I'm on my phone in the TradingView app, all of the information that comes up with the indicator blocks a lot of the the details, especially within the cipher indicator. So I got rid of it, got rid of all the labels. All right, now let's change the inputs. We want a 200 moving average. I'll make the color a bit different so you can see it better. Make it yellow, maybe size 2. Okay. Now, what you can do with a simple moving average or even an EMA, any moving average in TradingView, you can double click on it and go into the inputs. You can actually lock the time frame. So we want a 200 weekly moving average. So you can actually lock it in to be weekly. And that way it'll stay as a 200 weekly SMA on every time frame. So I'll show you what I mean by that. So even on the 1 minute, let's see. We'll see if it loads in on the 5 minute. Sometimes it's, yeah, you can see it right there, that little dot. That's basically where it's a bit, where roughly lies, but you have to go to the higher time frames to sort of see it properly. There it is. It doesn't load in properly on the 5 and 1 minute, it seems. So yeah, we weren't able to hold on top of the I'll go to the hourly, on top of the 200 weekly moving average. We broke above it, and a lot of technical analysts you'll see out there are saying that to basically reverse the trend, we need to hold above the 200 week moving average, which is what we tried to do here, but then we lost it, and then it became resistance. So we're back down underneath the 200 weekly moving average. Let's go to the 4-hour chart. Yeah, so, the party's not over yet. We could still pop up on top. This little downturn here could just be a washout, trying to liquidate the over leveraged longs that sort of played into this exuberance from this push here. A lot of people probably open longs. I know I opened a few longs coming up here, but yeah, I think the name of the game is still dollar cost averaging if you're investing. Anywhere in this range here, as we're below 25k, is good area to dollar cost average. So let's go back out to the higher time frames. Okay, let's check the weekly on the BLX, which is the long-term Bitcoin chart, the BLX. So only daily, weekly, and monthly intervals are supported by this particular chart. So if you want to look it up, it's just BLX, this Brave New Coin Liquid Index for Bitcoin. So if I go to the weekly chart, you can see I've got some TA drawn up here. These are just the halving events. We're due for another halving in 2024, but I'll talk about that another time. Let me bring back that moving average, just because I wanted to show you how it's behaved in the past. Okay, so we'll type in moving average, open it up. Make it 200 weekly. Okay. Let's go logarithmic. So as you can see, before, price doesn't spend very long below the 200 weekly moving average. I think this is a record. We haven't spent this much time below the 200 weekly moving average. Just trying to find in the past, have we ever? It's always acted as some kind of support. Unfortunately, this is where the SMA starts. Because it's a 200 SMA, it needs 200 candles of data before it produces a plot on the chart. So if we count, let me find the first candle. You can see as I bring it to here, that's 199 bars and then 200. So that's 200 bars that I've highlighted there on the chart. So 200 candles, and we're on the weekly, and it's a 200 weekly simple moving average. So it can only produce the moving average starting from here. It can't go back because it doesn't have enough information. But you can pretty much see the trajectory it was on. It probably came down something like this, as it was building. And it seems as though, in the past, we've pretty much used this moving average as support. It's, you get some wicks coming through it, but for the most part, we've been using it as support and bouncing off. And if you've noticed, oh, static, thank you, $1.99. Data, exactly, or data, as you guys would say. So every time we come into contact with the 200 weekly moving average, you can see what it produces. It produces a bounce, you know. It can indicate the bottom of the market as well. So it indicated the bottom of the market here. Obviously through here, even though it was like a triple bottom here, which is kind of what we're seeing at the moment. We've got a triple bottom on the daily. And yeah, here, we got some pretty heavy wicks going through, but it was only 2 weeks below the moving average there. And you can see what that produced. A really awesome bull run. So where are we now? With this moving average, we are spending the most time we ever have before below this moving average. So I guess it's a combination of many factors. It's the bear market, it's the global markets in general, the crazy interest rates that are going on with the Fed, inflation. There's so many factors that are causing this perfect storm to produce Bitcoin to be under the 200 weekly SMA. But I'm pretty optimistic still. I think we're holding this trend here. You can see this white line that I've got, this diagonal. You've got support here, number 1, support number 2, producing a line, and we're respecting that support level. So we're stuck between a rock and a hard place at the moment. The hard place being the 200 SMA, and the rock, or either way around, whatever you want to say, being the trend line. So yeah, there could be a bit of a squeeze happening here where we bounce between the two, because you can sort of see the trajectory of the moving average there. So ever so slowly we may creep up this support line. What would really shake things up is if we lose that support line, if we break down below that. But yeah, I think there is a bit more upside potential than downside. I think we've spent so long correcting. I think we're overdue for a proper relief rally. Even if we've seen the top of the relief in the last few days, where we came up above 24K, there could be, just a bit more consolidation sideways for some time before we finally break. So it's all about building confidence in the market, getting that sentiment back on board. Something interesting I saw yesterday was this earnings. Not earnings, sorry. Let me find it. I posted it in Discord. It's basically a calendar, a Forex calendar, but it applies to all economics. Sorry if this is blinding you because it's so bright, but when the Federal Reserve releases their fund rates, you can see here, if we open this up, it happens 8 times per year. You can see that. And it can have a dramatic effect on all markets, and crypto included. So March 17th, they announced a 0.5% fund rate. And let's see if we go back and correlate that on the chart. So March 17, and I don't doubt this is probably based off US time, so I'm going to go to New York, and we'll go back to the daily chart, and we're going to find the 17th of March. Let's see if that had any effect on price. Okay, where are we? Back here. So that's where it happened. Sorry for the line. That's better. That was the result. So we were chopping around, didn't know really where we were going to head. And then that came out and gave us a bit of a confidence boost. We got that rally. And you can probably take this and correlate it to the S&P, the Dow Jones, commodities, that kind of thing. Now, the 5th of May, let's see what the 5th of May produced. Right here. Boom. Very dramatic. Why did it do that? Because the funding rate was increased to 1%. It was forecast for 1%, and we got 1%. June 16, 1.75%. Let's see what happened there. June 16. Yeah. So it was the forecast comes in before the actual announcement. So potentially that's what contributed to this surge down, but it was confirmed on that candle, basically the 16th, which is why you saw a pretty solid push, and we set in our peak low at 17,600 and whatever. So when's the next one due? A federal funds rate. What are we now? We're the 26th of July. So it's scheduled for 2 p.m. on Wednesday, the 27th of July. So we don't quite yet have we do have a forecast. Here we go. Forecasted for 2.5%. Previous was 1.75, which is what we see here in June. And geez, that's a hike. That's up. And we'll see what the hell it is. What is this? What is the FOMC? It's the Federal Open Market Committee, also called interest rates and Fed funds rate. So this is interest rates rising. So forecast to be by 2.5%. The rate decision is usually priced into the market, so it tends to be overshadowed by the FOMC statement, which is focused on the future. Short-term interest rates are the paramount factor in currency valuation. Traders look at most other indicators merely to predict how rates will change in the future. So yeah, that's pretty much it. This seems to be, or a lot of people seem to think that this has a very significant impact on markets and sentiment across the board. So if it goes to 2.5%, don't think that's necessarily a good thing. It could, potentially. I don't know when the forecast came in, but maybe that's what caused this, or contributed to this pullback. But, fingers crossed it's less than is forecast. Like maybe it goes 1%, not 2.5%. But yeah, if the impact of it could already be priced in, which means, the pullback has already resulted. The forecast has already resulted in this pullback. That's what I was going to say. Okay. Anyway, enough about that. We've got just over half an hour left of the daily. And yes, we've got a brand new week. So the weekly ended pretty strong. Unfortunately, we couldn't get that weekly close above the 200 SMA. But not to worry, like we've still got time to reattempt or reapproach that mark and see if we can get back above it. If we can establish candle bodies on the weekly above the 200, that means we're on track for recovery. If we go back here on the weekly, and you see how it behaves once candles get back on top of the 200 weekly moving average, it indicates, positive momentum to come in the near future. So yeah, we're just waiting for that confirmation, waiting for that condition. So just be patient. We'll get there, I think. It got exciting when we when we finally got back above water. But yeah, we're currently underwater and waiting for a push above. So let's close down that. I'll hit save on that chart actually. We'll keep this layout for the BLX. And let's go back to the Tether Bitcoin chart, which I do the bulk of my TA off. And yeah, I think as the daily close comes in for Bitcoin, I think it would be fairly reasonable to see or try and predict a bounce here off the bottom of this falling wedge. It's not a wild suggestion. I think it's pretty realistic. But who knows? We could break down. We just have to wait for that confirmation. Wait to see what happens. And especially on the higher time frames, you need candle closes. So yes, it could wick through, but it doesn't mean it, cancels the pattern altogether. Wicks can go through just like we had here on the top side, and that, the pattern would still be in play if we got those wicks. But yeah, when you start getting actual, chart structure outside of the wedge or the pattern, that's when you know that it's been broken and that a breakout has occurred, especially if it comes back and back tests the outside of the pattern. We'll see if we can find some examples of that. I remember back here, there was yeah, okay, here we go. This might be okay to use as an example. Just trying to see where I could draw this from, but you can see there's like a trend on the top side here for these. See these wicks here touching. They all seem to respect that line pretty well. And then the underside of that was something like this. So this was a rising wedge. That's the bearish variant. Something like that. So this is pretty textbook. Rising wedge situation. But you can see, yes, it gets the breakout, right? It'll break down, but you can see it comes to back test. It did it twice. It back tested here and then again here. And we didn't re-enter the wedge. We got rejected by the outside and it confirmed the move down. And that's exactly what we got as a result. So pretty much when you identify a chart pattern like that, wait for the confirmation and the back test, because a lot of the times it will back test, but not all the time. Sometimes it just goes straight down, like it just falls out. If the sentiment is strong enough, it'll it falls out. And then yeah, on the other side, you've got falling wedges as well. So a falling wedge in this case was interesting. And yes, I am using wicks in this example. But you can see this particular wedge failed to be a bullish. So they don't they don't have a 100% guarantee of movement in the textbook direction. So textbook suggested that this should have come back up to test here and then potentially break out, back test, and then truly take off. But it didn't happen like that. It failed. And you can see the old trend line acting as resistance. So previous support becoming future resistance. Right, yeah. So if you can go back and identify, it doesn't matter what chart you're on. It could be an altcoin, it could be Bitcoin, it could be anything, and any time frame too. Like these play out on multiple different, all different time frames. But if you can identify them on the higher time frames, like the hourly, the 4-hourly, or even the daily, they're a very strong and respected structure. It's like stronger structure. That's not to say that they don't work on the 5-minute. They certainly do. Bit of a bear flag there. You see that? So you've got parallel channel. So you get movement in, bouncing around, and then a breakdown. Classic bear flag. Just as, there's bull flags as well. Like this one. And that is, you could argue that that's a falling wedge. See, we're down on the 5-minute. You can see that they exist on all time frames, if you can find them. But yeah, that's pretty much it for the wedges. You can see, yeah, a bit of a bull flag here. It's good to practice, like go back through the chart and see where you can identify these patterns. Because, more often than not, they play out textbook. There's a bit more of a bias toward the way the textbooks indicate. And yeah, look, this fall was full of bear flags. You can see them all over the place, like rising wedges or bear flags. They have the same outcome. This one's more of a rising wedge. Something like that. Textbook outcome. This one here, again, a bit more of a bear flag, I would say, potentially. But yeah. So let's go to present time on the 5-minute chart and see if we can identify anything. Ooh, there's a short-term rising wedge, which is scary, isn't it? Hopefully it doesn't eventuate to much, but something like this. And remember, they're not guarantees, so there's still a chance that it could come up, test the top, and then break it, and then find it as support, and then move up. But yeah, we'll see. It wouldn't surprise me if it came up, got rejected, tested the bottom, lost it, and then came down to test here again, find support, and then move up. Yeah, see what happens, hey? Vol says, expect us here. Zigzag. Rat tickle. CK C. Kaminsk. M. Pepin. MG. NS. How you guys going? So someone says they think we'll see $20,000 Bitcoin. Well, hey, bring it on. I'll buy it if it does. Look at that. We're getting that potential breakdown. Textbook. Less than half an hour to go now until that new daily candle. So today's current candle was quite negative, wasn't it? Check it out. Down almost 4.5%. Down about $1,000. You can see that up here, this number here. So if you're wondering what these numbers are, they're basically just giving you the information on the current candle that you've highlighted. So O is open, H is high, L is low, and C is close, which is the 4 pieces of information that a candle expresses. So, the candle body itself, like the fat part of the candle, is the open and the close. The wicks are the high and the low. So that's how that works out. So currently, and then obviously price down. So the current daily candle is down $976, 988. So it'll fluctuate, of course. And then, yeah, you've got the percentage of that candle in the brackets as well. So if you guys were wondering about the indicators, like if those labels annoy you, I'll show you how to fix that. If you just right click on the chart, go down to settings, go to status line, and then it's these things here, indicator titles and indicator arguments. See, you get the Cipher B indicator is so messy. It's got all of these little numbers and whatnot in there. And if it gets in the way, your way, just turn them off. Turn off the arguments, turn off the labels, and then it's all clean. Like, yes, we know this is a MACD. Yes, we know this is the Cipher B. We don't need to read it every day. It doesn't need to be there. And yeah, you can really adjust this. You can customize this however you like. But yeah, have a play around. TradingView's pretty awesome. It's got so many different tools and features. And I only scratched the surface of what's available and how to use it, but I'm sure there's like a lot more to learn. But I've pretty much got what I like, what I need out of TradingView. I don't need to really go through the hundreds of indicators to get more enlightenment on what's happening. I think the most powerful thing in technical analysis is keeping it simple. Don't get something that they call analysis paralysis, where you just overcomplicate things with too many indicators. And this is part of the reason why I don't upgrade to the Pro and the Pro Plus plan with TradingView. Because, they're like, oh yeah, you get 15 indicators. Like, why would you need that many? You really don't need that many indicators to see the direction and to understand what's happening. But, a fool and their money are easily parted. So, but hey, there's a lot of great features on the Pro and the Pro Plus plan. Like you get alerts. Exactly. So I like the 4K alerts though. Yeah. So that's fine too. But as far as indicators go, you don't need more than a handful of indicators. I think it's pretty ridiculous if you have any more than 5 on your chart. It just becomes a mess, and you can confuse yourself and contradict what you might be on the right track with something, but then you've got a couple of indicators too many that are saying the wrong thing, or contradicting your conclusion about the price, and that can shake you off something that you might have been on the right track with. So yeah, keep it simple, I reckon. Let's check out I mean, yeah, I agree with that. Over 3 lower indicators get flooded. Yep. So any more than 2 or 3 oscillators, you've got no chart left. It just floods the screen. Exactly. So what are the oscillators saying? The MACD on the weekly still hasn't crossed. It's close. I think we need another week or two to really know, to get the confirmation of the cross. But yeah, it seems to be suggesting that it's on the cards. You know, we could get this bullish cross here, and you know the MACD could start traveling back up into a bullish type move. But yeah, we'll see. We'll see how that plays out. The cipher indicator has dropped in a buy signal, which happened back here on this green candle. And it resulted in a push higher. So yeah, the cipher indicator, it's pretty awesome. It, you know, especially on the higher time frames, like we're on the weekly right now. But it certainly doesn't lie. And if it gets it wrong, it actually corrects it and says, "Oh, hang on a minute, sell it." You know, if you went long. Anonymous, hey Rick, Static sent us here. Well, thanks Static, appreciate that, and thank you for joining us. If you're just tuning in as well. 32 viewers, 32 likes. That's what I like to see. Thank you for the support. So let's check out the other time frames as well. And I think I've said this in a couple of streams, but just check out the strike rate of the cipher indicator. We've got a buy signal, which is the dot, the very bottom dot here. That's the signal to buy. So if you did that, you know, you bought on a dip and it went up. Awesome. Here, this was like basically the bottom of the market at that time. So, you know, it told you to go long and it didn't tell you to do anything. No selling until here, which is the first point of sale right there. Then there's another one here in that region. And then there's another one as it started to trend down again here. So 2 signals to buy and 3 signals to sell. So that all, you know, if you were DCAing or buying big at those points, then yeah, it produced a nice trade. So there was, yeah, all of that seems to be a big tick for me. Like there's no bad signaling there. This one here is a buy. Awesome. Didn't actually get a sell signal. We got a momentum shift dot. But then, you know, the COVID crash happened and no one really saw that coming. That was a bit of a black swan event. But yeah, no buy or sell signal on the cipher indicator on the weekly here. So you could have just, technically, you could have held that position because it didn't tell you to sell or buy, and then hold, and then there's the sell there. So positive move. That's a win. That's a winning trade. And then, you know, pretty much there, the momentum waves did not dip, you know, in this whole bull run. There was no momentum wave down to produce a buy signal. So with any luck, the people that were using this back then, I don't even know if this indicator was available back then, but yeah, if you had still held some kind of position off that buy, then you would have caught obviously the bull run. But yeah, here we are today. We've got a buy signal that came in not that long ago, a couple of weeks, and we are on the way up, even though the current weekly candle is a pullback. So yes, I'm a Duck says, please show your support and smash that like button. Thank you, I'm a Duck, appreciate that. That's what I like to see, more likes than viewers. That's not bad at all. 38 likes, 36 viewers. Brandy, how you doing? My day's going very well. It's a lovely, warm, sunny day. It is winter, but yeah, it's pretty warm. All right, where are we up to? About 12 minutes left. Ooh, look at that. We're dropping. Popping out. This could turn into a wick, but we'll see. The rising wedge certainly played out. Textbook. Rising wedge, bearish breakdown. Especially when you are coming into the rising wedge off a downtrend. Like that, it's kind of like a bear flag in a way. So that produced a push down. And we'll see if we can get back up on top of this support of the falling wedge, the big macro falling wedge. But it ain't looking too good to begin with. It's correcting again. Let's go out to the hourly. So if you look left, if you go out into the higher time frame like the hourly and you look left, you can see where the support structures live. There's one here, there's one here, there's one here. Just where all these pivot points are, where price pivoted in the past, could produce the support that we're looking for. So let's see if there's a fib that we can throw on the chart too. I think it's been a while since I've used fibs, but this is the swing low to swing high. And if we drag that across the chart a bit, there we go. You can see we're approaching the golden ratio, the 0.618 fib for support. So this shows basically when you're retracing back to 0.1. So this is 0.1. Let me just draw this differently. This is 0.1. This is 0.2 of the fib. If you come back to 0.1, that's a full retracement back to the starting point. So one-to-one retrace. Obviously, 0.2 is where the high is, so that's zero retracement. And then, yeah, everything between that is a percentage. So, 23.6% down, 38.2%, 50%, 61.8%. That's the golden ratio, that level. So I don't doubt that, obviously we're approaching it pretty rapidly here, but there should be some kind of reaction of this golden pocket here between 61.8% and 65% retracement. A really deep retracement down to the 786 is, pretty traumatic to the bulls, of course. But it's possible. Like, the golden pocket doesn't always succeed in holding price or rejecting price, but it's a pretty popular point on the chart to target when things are heading in a certain direction. So yeah, you can see how it lines up beautifully with the support back here. So that is 20,793. So basically 20.8K is what I'll call it. With any luck, we get a bounce off there if we do head down. But yeah, it's still, the hourly chart is still wrapping up. It's got 7.5 minutes left. Anything can happen in that time. This could end up being just a fake out, like a wick. And this candle could suck straight back up into the wedge, which is what the bulls are hoping for. Leave these off. So the 786 fib level almost lines up quite nicely with 20k, like a retest of 20k. And we very well may get a push down to test 20k before building the next bull structure, because that seems to be the trend. We've been zigzagging. It's a bullish zigzag because we've been getting higher lows and higher highs, but yeah, it's just a gentle trend to follow, isn't it? So yeah, that could be quite a natural move to come down and backtest 20,000 before moving up higher again. Just remember, we're fighting with this 200 weekly simple moving average as well. So we need to, on the macro scale, we need to get back up on top of that before we can say that we're like a full-blown recovery off this bear market. But yeah, still very much a bear market. But yeah, these three relief rallies have been really nice. Relief rally 1, relief rally 2, relief rally 3. Anyway, I'm going to give my voice a rest and slow down a bit while we watch the last 5 minutes of the daily candle. See, there's some buyers coming in, trying to support the price, or just grabbing a bargain. Maybe they see more upside potential, so they're placing their bids here. Whenever you see long wicks on the bottom, that's an indication that there's a lot of buyers stepping in. Just like we had here, there's a long wick on the bottom, long wick on the bottom. Price moved up, price moved up. So, and then same on the other side. When you get, fairly tall wicks compared with previous candles, on the top side, it means, there's a bit of pressure on the top. The sellers are stepping in now, and that reverses. So yeah, always pay attention. Like it's worth checking out the wicks. Like try to pay attention to the wicks as well. If you go, they really show on the higher time frames as well. This is the hourly chart. Check out the size of them wicks. That's buying pressure. Check out the size of the wick on top, selling pressure. When it's just a solid candle body with not much wick, that's just a wick or a candle that's playing out during the move. So this is a good example. This big solid green candle with not much wick on either side. That's just a continuation wick, like it's just continuing the trend up. But yeah, when you start getting wicks, you know that things are getting a bit shaky. So watch for those, watch for the wicks. Check out all of these attempts to support the price. See these wicks here? The bulls were trying so hard to hold, and yes, it did. It saw a bit of relief. It came up. There was a really big buy up right here, producing a hammer. And that resulted in that push up to just above 22,200. And yeah, unfortunately, could not get a close above 22,200, and we got rejected, come back down. So we are heading toward the golden pocket. I think I might eventually change up the music for the stream. I know I've been playing this same playlist for like 9 months now or more. But yeah, the challenge is finding something that's copyright free, that won't want to claim, any rights via YouTube. So very hard to find that kind of music. So I've just stuck with this because it's relaxing and it's, yeah, It's pretty easy listening. It's not hard to listen to. The 4 hourly. All right. 2 minutes left of the daily, or 1 minute left now. Let's go down to the minute chart. See what's happening. MACD is suggesting a change in direction here as we get a cross. So MACD attempting to cross the signal line. Hasn't happened yet, but it's trying. And when you get the cross, if it happens, you'll see the histogram bars change from red to green. That happens every time you get a signal cross. You get a change in color on the histogram. 16 seconds left. Getting a drop here, which is, I mean, we're down on the minute chart, but this could be some kind of a bear flag or bear pennant, bear wedge, whatever you want to call it. Heading down, potentially. All right, so let's go to the daily chart because we just had our daily close and we'll see what it did. Very red day. Let's hide the drawing so we can really see it. Yeah, that's a pretty nasty candle. Not much wick on the bottom side, which indicates not a whole lot of buying pressure. So yeah, this could certainly continue lower into that golden pocket that we were looking at on the hourly chart here. Maybe even lower. Maybe we'll get a retest of 20k and we'll see where it goes from there. But it looks like this falling wedge, at least for the moment, has been invalidated. But let's check the back test because it may come back to see if it can regain entry, and then that'll reactivate the falling wedge. But at the moment, it's not looking great. Could be some discounts across the board moving into the new day. But yeah, let's see if we can get back in. Early days, it's only a couple of minutes into the new day, so these are still trying to figure out the direction. Bitcoin is usually the sentiment setter or the trend setter for the market, so that's why we do so much analysis on Bitcoin. But yeah, DC woodworking, yes, it could be a big old bull flag, this whole structure. So instead of this falling wedge, if we bring this down as a parallel line, like this, there's potential for that to happen as well. See, sometimes you sort of have to ignore some of the action outside of what you're trying to call a flag, just to sort of get it to fit the price action. But either way, a falling wedge or a bull flag produce a textbook move up. So, you know, even if this falling wedge structure fails, that we've still got potential for a flag to play out as well. So maybe we come down and retest. You know, it could do this. It could start rolling down the the bottom of the flag, sort of like what it did here. See how it rolled down? Like it got this sort of slope. And then, you know, find support on the golden pocket, like right here, and then kick us back up again to test the top of the flag and hopefully get the breakout. Let's see how it goes. Yeah, it could be a giant bull flag, you're right. There's definitely a channel going on, that's for sure. I can see that. So just to make it a little clearer, I'm gonna change this to like a dashed line and maybe darken it up a bit. Just so you can see the flag a bit better. But yeah, 20K could be on the cards. This actually, if we go back to what we were looking at here, this rising wedge, this could have been a really good short opportunity. Like when we got that back test of the bottom of the wedge here and rejection, that would have been awesome to open a short right there and then realize all of this movement as a profit. So that's why these patterns can be very helpful in trading if you can identify them. And you know, obviously you have your stop losses in place in case it doesn't work out. Like if you did go short here, like on the back test and rejection, if you went short there, you'd want to have a stop loss, you know, at the previous swing high, which is probably like up here. So you would realize a loss if it stopped out of, yeah, not even 1%, 0.6%. But yeah, that's just an example of playing those patterns. Yeah, this movement here where it's like sliding down, but in this like sort of tight box is kind of reminiscent of this. Like it sort of consolidates. Had another one here. It's like a slope heading down after the downtrend. You know, then actually it changes direction. Some call it a Bart Simpson. Bitcoin likes to do a lot of Bart Simpsoning, where it produces a continuation pattern and then it fails. It goes in the anti-direction of the textbook. So Bart Simpson being, you know, direction, consolidation, and then back up or like change in direction instead of the textbook down, you know. Bart Simpson here as well, kinda. It's an ugly one, but nonetheless. Here. They're all over the place. Here's an example of when it wasn't a Bart Simpson. It came down, like somewhat consolidated, and then textbook moved down. So a Bart Simpson would have been like this, where it's come down, consolidated, and then reversed. But yeah, they keep you guessing, these market makers that are, you know, choosing the direction. They always keep you guessing, and that's what makes it hard sometimes to trade profitably. So the way around that is to, maybe if you're still new to trading or you don't have that much experience, stay away from leverage, like so that you're not dealing with liquidation. And then the other way around it is just to dollar cost average, you know. Keep buying the dips every time it comes down, like accumulate more. And then eventually, when the market makers have decided, hey, we really want to drive the market up, then yeah, you'll be holding a really nice position by then, and you'll be ready to take profits up on the highs. So that Fed meeting is Wednesday, which is in about, today is Tuesday for me, so that's 2 days away because it's in the US time. So you guys are still, what, Monday night for you guys in the US? Tuesday morning here. But yeah, that Fed thing, that's still a couple of days away. Yeah, I mean, on the macro scale, like long term, I'm not worried. Like, I'm confident that we're going to get some really nice price action in the not too distant future. I think we've seen the worst of this bear market already. May even be so bold as to say that this was the bottom. But yeah, could be wrong. There's no guarantees in crypto, but yeah, that seems, it seems reasonable to suggest that that's the that we've seen the bottom here because of this triple bottom. And you know, the oscillators, the pi cycle indicator, the moving average, the simple moving average, we've spent so much time below the 200 weekly SMA, which Bitcoin's never done before. It's never spent this long. But then again, you know, Bitcoin is only a young crypto. It's only been, I mean, it's a young asset. It's only been around for 11 or 12 years or whatever it's been. So yeah, there's records all the time. Like last year we had a record. We had a death cross on the daily, but then set in a brand new all-time high in a really short amount of time. So we got this, you know, instead of a blow off top market top like this, we got like a Wyckoff distribution thing where we distributed here, accumulated here, and then distributed again. So it was, yeah, we've seen it now, we've seen it before. So we had this sort of like double top market in a way, which saw us get the end of the bull cycle. So yeah, it's hard to say. Like, there's a few factors that need to happen, a few conditions that need to be met to call it a bull market again. One of those is getting above the previous swing high, the macro end. Whether you call it this here or this here, we need to get highs going above that. So the first one, we definitely want to get above that. And then the second one here. And then we can look at, you know, attacking, approaching all-time highs again. But I don't think that's going to happen this year. I'd be very surprised if it did. I'd be pleasantly surprised if it did. But yeah, I think it's still probably too early to consider new all-time highs for crypto, for Bitcoin. I think it's probably going to happen in 2004. So next year is going to be, you know, maybe we get a relief, like a bigger relief rally going into next year. Like, you know, we consolidate a bit more and then, you know, come up, get rejected by one of these big price levels, and then back down, and then prepare us for that halving where it really takes off and takes us up beyond $100,000, hopefully. So that's the long-term sort of outlook. If it sort of does anything similar to the pattern or the combinations that have been playing out in the past for Bitcoin. Anyway, let's go back to the smaller scale here and see. So the wedge The wedge seems to be failing, so we can scrap that idea, I think. But we've still got this flag, potentially. If that fails, then we're looking at the golden pocket of support. We're trying to get that support at 21K, 20.8. If that fails, then then we've got, you just got all these next levels of support that could potentially hold us up and keep us positive, or at least sideways, rather than a continuation of the bear market down to 14, 12, 10K, which is not impossible, but it would be pretty damn tragic for Bitcoin to go down there. But there's always a silver lining. If it does go down that far, what an opportunity to accumulate. What an opportunity to buy and improve your holding of whatever coins you're in on, or into. Because if Bitcoin goes down to 10K, you best believe that a lot of the alts are going to drop like crazy as well. So there's got potentially some big discounts are on the cards. But if not, then we're the positive is we get a nice relief rally, which is tradable. We can make some nice gains off that. So there's good news in both scenarios. Who cares where it goes? We've got positive things to do if we drop, and if we go up, positive things, take profit. You know what I mean? So anyway, guys, it's pretty much all there is to say at the moment. By next stream, we'll see how this flag played out, whether it failed, whether price fell through the golden pocket. If it gets really hairy, we'll know by the next stream. But fingers crossed this holds and we get a push up to the top of the range here, or this flag. All right, guys, thanks so much for tuning in, and I'll catch you on the next stream. All right, see ya.